Popped up on my CNBC feed. All right. Let's let's get to it, man. So again, um, for all y'all, that like to am I in the right Discord? Tim, your stream is hijacked. Was that from the cow feet video? Uh, for those of you with 50-year-old eyes and you you like to watch you like to watch uh you of the tube on your TV in your living room, you're welcome to look at you of the tube on your TV in the living room. Like I said, I don't know what I'm gonna say, but just in case I say something of merit, I want there to be an opportunity for you to go back and rewatch it. Uh, we're gonna talk about how I backtest the concepts, and this is gonna be more so for people that's new to the ICT concepts or people that's been around them for a while and they don't really understand how to go back and price and look for stuff, or they they struggle with, like, okay, I can see the stuff, but how do I figure out how I want to trade it, right? So we're gonna, because when you're doing all the back testing, you're not only looking for the stuff to develop in price and how it looks when it once it develops in price, but you're training your mind to start to see it when you ain't got nothing but this scary right edge over here, and you don't know if that next weekly candle gonna be red or green, if that next daily candle gonna be red or green, if that next hourly candle gonna be red or green, right? So that's what you're teaching yourself to see when you go back through the price and look at it, right? So we're gonna go up to the top to the monthly, right? So when you're back testing, right, you want to have an objective that you're looking for, right? We're going to have an objective that you're looking for, okay? This is going to be class participation today. So I want two people to tell me, right? I'm going to, all right, I'm going to write a number. Well, I'm going to type a number on a notepad. I'm going to type a number on a notepad. Now, I want everybody that's on YouTube or Discord to type a number, and it's don't only just type it in there one time. Don't put 500 different numbers, right? I want you to type a number, pick a number between 1 and 100 and type it in the chat, right? And then the people that's closest to my number, two people that's closest, the two closest people to my number without going over, I want you to I'll tell you what I want you to do. All right. I see the Discord popping up. All right. I see YouTube. One person on YouTube type something. Hey, Empire Traders, what's up, man? Empire, what's up, Empire Traders? You know, you put some ice hot on that back. All that swinging you was doing yesterday. Empire Trains was swinging for the fences, baby. Wasn't hitting nothing, but he was swinging. All right. Is that everybody? The Price is Right vibe. Okay. All right. So, all right. Wait a minute now. Let's 1, 2, 3, 4, 5, 6, 7, 8 people in Discord type something. How many people I got in here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Hold on, man. It should be more than 8 than type something now. It should be more than 8 than type something. Who ain't type something? All right. Done. I don't see you. All right, there go Deborah. Here to learn and share. I don't see you. I can. I don't see you. Jim. I don't see you. Lump. I don't see you. Shop Girl BK. I don't see you. Honestly, I did kind of. I bet you did. I bet you did with all that swinging. Y'all try me with the no voting. All right. Tish and Barbara. Tish and Barbara. Give me your trading time frame, your entry time frame, and your PD array of choice to enter off of. Tish, you go first. And don't be
Can you
giving me
hear
all
me?
that. Yeah, I hear you. I was gonna say don't be giving me all that my mic ain't working mess.
I had to switch out and go to my iPad.
Okay. All right. Give me your preferred entry time frame and your PD array of choice.
The entry is the 1 minute, and I see the fair value gap the easiest.
All right. All right. So the M1 and the FVG for Tish. All right. Then Barbara, go.
Hey, I'll say the 15-minute fair value look, but enter on the 5.
So your entry is a 5-minute FVG. All right. So your entry is the 5-minute, but you want it to be off of a 15-minute FV. You want a 5-minute confirmation off of a 15-minute. That's what you're saying.
Correct, yeah.
Oh, complicated. You know what I'm saying?
A little bit, but mainly I'll be trading, during work hours, so I try to make it work.
All right. All right. So, okay. And the reason why I'm saying that because you want to have a purpose of what you want to have something that you know you're looking for, right? All right. So this is your PD array of choice. This is your entry time frame, right? Do y'all have any other requirements or any other steps, if you will, to your entry model, that stuff that has to happen prior to you executing? Is there anything specific that has to happen to let you know, okay, or are you just, Barb, are you just looking for that 15-minute and then looking for a confirmation on the 5, and then Tish, what was making you choose that 1 minute? Is there anything that before that has to happen before you start looking for this?
I started looking to see how it like if it make a 15 minute gap. I start looking at the one. I go down to the 1 minute, see how the gap closed. If it closed, I can't explain it.
So yours kind of the same where you after it create a 15-minute gap when it trade back to that
Back into
15-minute
it,
gap.
see
Okay.
how it close, how it react to that 15 minute, and
Okay,
then
so
it will go
once it
down to the one.
okay, so yours kind of like his. Like once it make a 15, you want to come back to that 15, then make a 1. And
Right.
then Barbara, you once yours make a 15, you want to come back to that 15 and make a 5.
Yes, I think I'm following what you said. Yeah.
Okay, so it make a right, you make a 15-minute fair value gap, this bullish in this case right here, right? As we're trading up, then we come back here and then make a 5 here, and then you enter off that 5. That's what I'm saying. Like that.
Yep. Yep. That's it.
All right. And Tish, yours is just make a 15, come back, make a 1, and enter off that 1. That am I
Yes.
correct? All right.
Yes.
All right. So tracking. Now, okay. Now we know this is our criteria, right? We know this is our criteria for our entry setup, right? This the criteria for our entry setup. So while we're going back through price and looking at what price did, right? This is what we're going to be looking for. When this anomaly, let me turn on my fancy dancy. When this anomaly happens, right? We're going to identify, okay, I saw that happened, right? And was it a winning trade or was it a losing trade? But we're not going through and only looking for this. We're going through studying the price. And then when we see this, we're taking our notes about if this was a winning or a losing trade and what price did during this right here. But we're going through just studying the price, right? All right, so that's our criteria, right? That's our criteria. So here we go on the monthly chart, right? Starting at the monthly chart and just looking at current price action here, right? Price came down, right? During this month, we see that price has traded down and going back up, and it opened here, right? At some point in time, we was up there. Some point in time, we was down there. Then right now, right, we're right here. But the month is not over yet. But that's where we are now. So since it's a green candle, right, and the monthly time frame is bullish, right? Right now, we're looking for. Let's go in and just look for what's making this current price action be bullish. Okay. And so on this monthly time frame, we see that price traded down here, right? For some reason, that way right there. And then we came back up. Okay. If we're looking to the left, if we're looking that way over there, can somebody tell me, right? Can somebody tell me two? Somebody tell me, name at least 2 different PD arrays that you see in current price action to the left, right? And when I say current price action, meaning this month's open, right? This is all this candle here, right? Looking to the left, tell me 2 discount PD arrays, meaning below the opening price, right? That the algorithm could have traded down to on this move down right here, looking to the left, right? It can be an imbalance. It can be just a reference point, but give me at least 2 of them and go. I'm listening. Don't be shy now.
Bullish order block.
All right. Bullish order block. Let's go. Let's go. Who is that, Michelle?
Deborah.
That was Deborah. What? Why you sound like Michelle? What's going on, Deborah?
I'm not sure.
You said bullish order block.
Must be this
Sharon,
phone.
your sweet ain't sounding chipper. What's going on? She ain't sounding chipper.
He ain't cooked me no fries.
You don't need no fries. Raise your cholesterol. Hey, I'm listening. We got bullish order block. Come on now.
Did it trade into the relative equal highs of the two green bars on the left?
Man, didn't I circle this right here?
Yeah, but that's what sorry.
Current price right here. Current price. Current price. We'll take that. You talking about this right here?
Yeah.
So since you talk about relative equal highs, we gonna patch it up for you a little bit and say that price traded into a old high, right? We got an old high right over here, right? In the current price, an old high. We'll take that, right? We'll take that, an old high. All right. Somebody give me another one since y'all took so long to be talking. Somebody give me an imbalance. Somebody give me a.
Is that an immediate rebound with
I said, give me an imbalance.
imbalance?
The bottom wick of last month, like the low.
I'll take it. Right? I'll take it. But, right, what we want to look at, right? We want to look at what is price reacting off of, right? So as we came down, there is an imbalance right there, right? There's an imbalance right there, a consequent encroachment of that wick. But we want to focus on, while we're back testing, we want to focus on what is price reacting off of, right? So when I say look to the left, right, we want to look to see what is price reacting off of. So when Deborah, was that Deborah, came in with the bullish order block, it's coming down and it's reacting, right? This is a bullish order block right here. This is your entire order block. So when you say consequent encroachment of the wick, right, this is the wick you're looking at here, right? That's the wick you're looking at there, because we're trading down into that imbalance right there, right? When price is coming down to any PD array, you want to see the sensitivity in the upper portion, right? And if price is coming down to a reference point like a bullish order block, if it's exceedingly bullish, you want to see the sensitivity in the wick. Why? Wicks are imbalances, right? So right there's a wick, there's a bullish order block, there's an old low right there. So these are all PD arrays that you can watch. You have an old low, you have a old high, you got consequent encroachment of a wick, you got a bullish order block, right? These are PD arrays that's resting right here in price, right, that the current price can react to. Okay.
You have phone number with this?
Yeah. 917-749.
You might want to mute. You might want to mute. You might want to mute. We on YouTube and we can hear you. Yeah, Vernon. I don't know what you about to say. let me mute it. Sound like you was like calling out something important. We on YouTube. All right. Okay. Where we was at? All right, CE of a premium wick on the monthly. All right, monthly chart. Okay.
You said premium wick.
Yes,
I thought it's below price though.
it is, but it's a premium wick. It's the top wick of that candle.
Oh, top of that candle.
Yeah, it's the
Gotcha.
top wick of this candle right here, but it's
Okay.
below price. If you're above a PD array, it's in the discount from price, but it don't change the fact that it's a premium wick.
Gotcha.
Just like when you get, and there's an inversion factor to all the PD rays. Like if you got a bearish order block, right, and it's in the
Mm-hmm.
premium of a move. Once you get above that, it's still a bearish order block. It's just an inversion of it, and it's still, you know what I'm saying. So it don't change the
Mm-hmm.
fact that what it is, right? And over here, you just don't say inversion wick, but it's still a premium. You ain't gonna say inversion premium wick. It's still a premium wick, but it's just below price, so it's in a discount.
Mm-hmm.
All right, good question. Good question. Okay. All right. Then we got. So we see here, using the benefit of hindsight, we see price reacted nicely right at the consequent encroachment of that wick. So at this time, there's no reason for us to come down here and mark out the order block open, right? There's no reason for us to mark out this prior high right here, right? There's no reason to go in here and mark that right there. Put prior, all I got is prior week. There's no need to mark that. Why? Because we already got consequent encroachment of this already marked. No need to clutter it up with this other stuff that's right in the same spot and with stuff that we didn't reach. Okay, less is more. All right, and then it starts to get you in a habit of the stuff you actually need to mark on your chart. Okay, and then we can, okay, and then for like deeper studies, when you want to look at like deeper studies on stuff, but we're not going to do today, right? If you want to look at like how price reacts on lower time frames, like when we're talking about studying open, high, low closes, right? Then you can mark out stuff like these old highs and old closes, right? Old highs, old lows, old opens, old closes, but especially old highs and old lows, right? And if you notice here, right, you see how this candle closed up there with a possibility of making a fair value gap this big, right? Now, Michael taught a while ago, and this ain't got nothing to do with like the back testing right now. This is just a gem that I'm throwing in. Michael taught a long time ago, when you have a candle that wicks all the way down like this, and you got two very long overlapping wicks like this. Let's just say if that candle wick had come all the way down there, he had taught something that's called an implied fair value gap. Who remember that? Do y'all remember when he taught the implied fair value gap?
Yeah.
Okay, so what the implied fair value gap is, you take the consequent encroachment of this wick here, which we already got. Then you would take the consequent encroachment of this wick, right? Just say if this wick was if this wick was this long, right? Then the space in between this consequent encroachment and this consequent encroachment, that's your implied fair value gap, right? Because these, like this candle was closing with enough energy to give you a fair value gap, but then you got an immediate rebalance, and now you got these long overlapping wicks on either side of this displacement candle. So now the difference, the space in between this consequent encroachment and that consequent encroachment gives you a implied fair value gap, right? And so what I did, right, I took that a step farther in my studies, right, where I look at where they just barely overlap like this. It don't really give you like if we did it here, right, if we did it there, right, now it's giving me a huge implied fair value gap right here, right? But if you notice, right, price is still reacting inside this huge area right there, right? It's still reacting there. But when it's like barely overlapping like that, what I started to do, right, what I started to do is I would just look at the little bit of space where they do overlap right there, right? I look at a little bit of space where they do overlap right there, and then I would just look at that area, right, on the lower time frames to see, right? So this candle here, right? This is when this candle opens, right? I'm just gonna highlight all of this right here, right? Right there. So I'm gonna go from when this candle opens. So what I'm doing here, I'm highlighting price from after this candle closes, right? Because the start of this candle is the end of this candle. So once this candle came down and touched that one, right, then I would just study how price reacted in that little area of that old low and old high, right? And then let's just go down to like a 5-minute chart, right? We'll go down to like a 5-minute chart, and then I would go in there and I would look at, as you see here, God dog it. You know what I'm saying? We can see like the sensitivity of price in that area there, right? Because remember, we highlighted from when that candle, once that was created and this candle started, and that candle started like up here somewhere. See, this is the start of that candle. So this is when it started right there, right at 6 p.m. on the 1st of January. Okay. And you see price, you know what I'm saying? Look at the sensitivity and price to the area there, right? Came down there, right? And we went up, did whatever we was going to do, right? And then once we came back down below it, right? Look at all the sensitivity and price to that area right there, right? And then once we came down low, we look at how we gapped up to it, right? We get closed here and gapped all the way just above consequent encroachment of that area, right? And look at the sensitivity of that area right there, right? And then noticing that gap right there, what would that gap right there be? This right here. Somebody tell me what this little area right there would be. Can y'all see the time on the bottom down there? What time does that say? What's the date and time there?
6 p.m. 1/13/25.
Yeah, so that's Monday the 13th at 6 p.m. Right? And then
That might be a new week opening gap.
what? A new what? What time is it on? It's 6 p.m. on Monday. And this right, and this is
new day opening gap.
a new day opening gap. Y'all see that right there? Yep. That ain't no accident, right? The algorithm just so happened to create a new day opening gap right in the same spot as this other area where it's been showing all this price sensitivity at. You see what I'm saying? All this price sensitivity right there. That's not an accident, right? That's from the 13th. Let's see what we got around there for the 13th as far as gaps. So we got what was that? January 13th. All right, so January 13th. Right, we had a new day opening. Yep, we got a new day. We got a new. Oh, wait a minute. That's a new week opening gap because what was the 12th? Was the 13th? Was the 13th a holiday?
No, the 13th would have been that Monday, but then when you mark the 6 o'clock opening and the end dog, you doing for the next day, right? So it would be 1/14.
Yeah. Oh, you know what? Know what I just looked at? This is all right. So it just happened to be the same spot. It just happened to be the same spot right there. Right? See, yes, that's what it was. So 6 p.m. Sunday, it happened to be the same spot right there. So we got a new week opening gap, and then the 14th, we got a new day opening gap in the same spot. You're right, Deborah. Thank you. I was having a brain crap for a minute, right? So look at that. We got two. And the new week opening gap is like engulfing it. Y'all see that right there? The new week opening gap is there. There, right? This is the area that we highlighted. And then the new day opening gap is here, right? So we came back down to that area right? We're reacting to a new week opening gap. We're reacting to a new day opening gap. But at the same time, there's another sensitive area that's in that same spot where the algorithm just so happened to create these new sensitive areas in that, and we call that confluence. This is part of the reason why the concepts work so well, because the algorithm is referring back to old price points that it left for a reason, and it's making new price points to build off of in current price. You see what I'm saying? This is why it works over and over and over and over and over. And this is what makes retail support and resistance work, because sometimes you get lucky and just put a line in a spot where the algorithm is truly using it for that purpose, right? That just kind of came out of nowhere. Let's get back to what we was doing. All right, we don't need that. We don't need that. We don't need that. All right, let's go back to the monthly chart. All right, try not to have y'all here forever. Okay, so we said we had the consequent encroachment, right? We see price had a nice reaction off of consequent encroachment, so that's what we're gonna mark. We're tricking ourselves into thinking, okay, this is what we saw in price. Okay, so for the monthly time frame, we reacted here. So right now, that's all we're gonna mark, because we don't have a fair value gap to mark out. We don't have any. It didn't make it to the price of the order block, so we're not worrying about marking that out. So now we can move down to a weekly time frame and see what happened there. But before we go to our weekly time frame, let's do this right here. Right, so we'll come here and we will get us a type tool. No, let's do it like this instead of getting us a type tool. All right. Let me see here. That's November. All right. Okay. All right. No. So November. All right. So go there. Okay. Come here. All right. November, December. 1, 2, 3, 4. July to October. After consolidating, y'all excuse my let's do it like this so I can see when I'm making egregious typos. After consolidating for 1, 2, 3, 4 for 4 months, July through October. July through October 2024. Price expanded aggressively expanded aggressively to aggressively taking out July's buy-side liquidity and closed December with a strong rejection and closed. God dog it. Closed December with a strong rejection. This led me to anticipate a retracement back into the October bullish order block. I wanted to see sensitivity in the premium wick of the bullish order block. Come on. The bullish order block, because the monthly chart is has been very bullish. All right. The monthly chart has been very bullish. Okay, so
What happened? No, what happened? I touched the ground and I lost it.
okay.
I didn't know that.
All right. So
Help!
monthly notes, monthly chart notes. That's good. Chart notes. All right. I put that in the Discord for anybody who wanna save that for an example of something. Okay. So now, boom. And this is what I mean by you want to trick your brain into thinking you saw this stuff in the beginning, right? I'm just typing this on the fly, but this kind of stuff you want to type out, right? I said after consolidating for 4 months and gave the time frame, right? I mean the span, price expanded aggressively, taking out the July buy side liquidity and closing December with a strong rejection, right? Showing that we came to this spot and then we consolidated here for 4 months, and then we expanded away aggressively, taking out that buy side liquidity, right? Telling how much time we was there when we took out the liquidity, where the liquidity was resting at the swing high of January. July, the swing high of July. If I said January, I'm sorry. And then got a strong rejection in December, right? Which led me to anticipate a retracement back into the bullish order block, and I want to see price sensitivity of price at the premium wick of the bullish order block, because the monthly chart had been very bullish, right? So just making myself believe that I saw this, even if I didn't really see this. And we all know that we actually saw this. But if we hadn't actually saw this, this is how we go back and train. This is what I did in the past to start to train myself to be able to anticipate the things that y'all see that we do day in, day out, week in, week out. And, you know, we're not 100%, but we highly accurate at saying where price, anticipating where price should go. Right. All right. So get that out the way. Get that out the way. Leave that, because we want to keep that there. So we'll go down to the weekly time frame. All right. So now on our weekly chart here, all right, we come in and we see, we already said that because of the, oh, let me go back here. Go to the monthly, and we're going to put a line here, because this is what we're studying, what made this reject there. So we're studying this January price. So I'm putting a line there on January. So when I go down to my weekly, I know when January started, right? So I know this is when we started January here. So these 3 candles there is January, right? And this right here is my closure of December, where I said December had a strong rejection after taking out this buy side liquidity down there. So once we went above there and rejected off, this is where December closed, right here. Okay. And so I know this starts January. Okay. So now looking at the weekly chart, right? Somebody give me the 2 weekly PD arrays that stick out to you that price reacted off of. Right? We're looking at where price reacted, right? So give me the 2 weekly PD arrays that you see to the left in price that price reacted off of. Right? Go.
Got an order block?
There's a inversion fair value gap.
All right. Inversion fair value gap. And who's that said the order block? I heard somebody say order block.
J-Rock.
J-Rock. Okay. And that was Jim that said inversion fair value gap, right? Where's my... Am I giving credit to the wrong person? Was that you, Jim?
Yeah. Would that actually be a BPR because of the other fair value gap before that?
Yes, it would, right there. And this inversion fair value gap happens to be the exact balance price range. See how it meets up to that BISI? That BISI and that SIBI are the exact same size. So that inversion fair value gap is a balanced price range. Very good. All right. So let's go here. We got a weekly bullish order block. What in the haberdashery globe going on now? All right. So we got a weekly bullish order block there. We have a weekly inversion fair value gap. All right. And that's what price reacted off of. So that's all we're going to mark out. Okay. So let's do this. Let's come back here and do this right here, because we want to get everything. Want to do everything decent and in order. Can y'all hear my son back there? I'm glad y'all can't. I'm glad y'all can't hear that singing. We Gonna Be Alright by Kendrick Lamar at the top of his lungs. Right?
Why do I screenshot black and white? Why do I screenshot? What happened? Oh. Help. Help. Bro, I thought I was dead because I went in first person.
Traded to mean threshold. Bearish. Order block.
I just watched that video. Oh, never mind. Help! Help! I need healing! I need healing! Need healing! Dummy! Punch! Me! We have three supports. I just realized I didn't even know that.
We go. Oh, right there. I think about what we marked out. Inversion, fair value gap, and bullish order block. All right.
Who is this idiot? Dummy! What are you doing? Get back. I am Agamotto! I'm dead! Yeah, no, I am. Got knocked out.
Where did it go? God dog it.
Bro, why is Squirgle's thing jumping from wall to wall? Yeah, I know, but it was jumping from wall to wall for like 30 times, bro. Like, it was stuck. No idea. Yeah, I know, but I don't.
The first, sorry about that, y'all. It wasn't acting right. First week of
Hide behind the wall.
January traded below
Oxidated.
December's
No, you don't.
low, showing a desire to continue the retracement, but rejected off the October 28th. October 28th bullish order block. All right. Bullish order block.
Dr. Strange, on me. No, I'm in. Kill him. Kill that mantis thing.
After
Oh, that's so selfish. Oh my gosh. Most selfish, least selfish,
this rejection,
that black man just blinded me. Just flashed me.
price traded back to the premium,
Dummy, what are you doing?
the premium of the range
I'm 6'5" and 1. Oh my god.
until it reached
Oh my god. I have 10% accuracy.
mean threshold
Holy D.
of
Cloaking dagger.
the December bearish order block. Bearish order block. Bearish order block, and immediately dropped to the July 15th, July 15th inversion, bearish inversion, fair value gap. All right. The third week of January took out the low of the second week and gave the bullish power of 3 week I was anticipating. All right, that's good enough. It makes sense in my mind. All right. Okay, so here, right, after anticipating the retracement, right, price came down into the bullish order block, but quickly rejected. That rejection took us back to a premium, and it stopped at the main threshold of the December 9th. I didn't put it there. The December 9th bearish order block, and then price immediately ran back down to the July 15th inversion fair value gap. Then the third week opened up, took out the sell side. Oh, not only did it take out sell side, the third week took out sell side, second week sell side, and week January traded into the September. Yeah, that was September, right? No, October. The October. Traded into the October monthly premium wick consequent encroachment. Wow. Taking the low of the second week. That's good enough right there. All right, so go there. And we'll go here. And that right there will be the weekly chart notes. All right. Okay. Don't need that here. Okay. Don't need that there. Don't need that there. Don't need that there. All right. So now, all right, we're gonna go down, right, to a daily time frame. All right. So here we are on the daily time frame, and we're looking at January here. All right. So we're looking at January here. This is the time. This is what we're looking at here. Okay. So now here on the daily time frame, right? Let's talk about how we came down here. So now, but for the sake of making this forever long, we're not gonna go through and like type up all of those notes right now, but we can come in here and we can see a daily bearish fair value gap, which is also in line with a balanced price range right there. Right. So let's just mark out. It's showing the most respect to the balanced price range. So we're just going to mark out the balanced price range right there. Okay. But you can mark it however you want to. You can mark it however you want to mark it. All right. Right, you can mark it however you want to mark it, but okay, we got us a daily balanced price range there. Okay, and then yep, that's good. And then we come down here. Right. Sell side liquidity there. Okay. Sell side liquidity there. All right. So, and then we see here price right there, reacting off a inversion fair value gap there. All right, so, and what I'm gonna do here on this, so I ain't got to make so many lines. Right, so I ain't got to make so many lines off of that. We're going to so I ain't got to make so many lines over here, so we'll know. So I'm just marking out the stuff where price shows some type of reaction on, because here we're coming down into like weekly stuff, right? Up here we was going into weekly stuff, but we also traded into some daily stuff there. There's nothing over here worth annotating on the daily. Down here I annotated this because it was, you know, a daily balanced price range that price traded up into there. And then I annotated this because on the way back up on the 16th, price used this. You know what I'm saying? The 16th and the 17th really, price used this as a inversion fair value gap. So I can, since I know that this happened after the start of January, then I can put I was going to move that over, but I can put a line there, right? Because I was going to move this over to here like that, so I know when this was created and when price reacts off of it, right? Even though it's back over there, but I can just leave it there. Then I'll put a line. I'm putting a line here. Y'all probably can't see it, but I put a line there, so I know that anything to the right of this line, there's a vertical line right here. Anything to the right of that vertical line right there, right? Anything to the right of this vertical line, I know that it's reacting off of that inversion fair value gap. Okay, just like anything to the right of this vertical line right here, I know that it's happening in January, right? God dog it, can't make a straight line to save my life right now. Right? So if I draw that line like that, and now if I go down to the 60-minute chart, which is 2 times down from the, see, anything to the right of that line, I know it's January. Anything to the right of this line, I know it's reacting off of that inversion fair value gap. Okay, so now we got the important daily time frame things, and on the daily we would do the same thing. We would annotate at the start of January, right? Price swept sell side liquidity and rejected off, showing a desire to trade back up into a premium. Price traded back up into the premium of the price leg until it hit a daily balance price range, and stopping at mean threshold of a bearish weekly order block, respecting the balance price range and the mean threshold of the order block, showing a desire to keep the sale program intact, however you want to say it. Then price over the next 1, 2, 3, 4 over the next 4 days traded back down, taking the sell side from January the 2nd, right? Then it traded down, and then trading down into consequent encroachment of the monthly wick, the wick of the monthly order block, where we our monthly anticipatory reactionary point, however you want to say it, traded down into our monthly anticipatory reactionary point, and then over the next 2 days created an inversion fair value gap from the 10th, right? Created an inversion fair value gap from the 10th SIBI, right? Then price traded back down into the inversion fair value gap and rallied up to the lower quadrant of the weekly order block, closing at the last up close candle of the bearish order block, whatever, you know what I'm saying, however you want to word it, right? That's what price currently is, however you want to word it on the daily. Mark out what the daily chart did. Okay, now we're down here on the 60-minute time frame here, and then we are looking at like January price action, but for the sake of time and brevity, right, we're just going to go straight to the 15-minute time frame, because our criteria we're looking for is based off of 15-minute fair value gaps with 1-minute confirmations and 5-minute confirmations. All right, so we go straight. God dog it. Sorry, y'all. Okay. All right. Okay. All right. So come over here. 15-minute. All right. So inside our 15-minute, looking at the January price. Okay. do y'all what sessions? What sessions do y'all trade? New York or another session?
I've been looking at London and New York AM.
Yeah, New York AM for me.
All right. All right. So looking at London. We're gonna do all right. Just doing this to speed stuff up. All right, so this is the January line right here. All right, so looking at right, we'll look at London session here. Right, we got a London session here. Then we see here that inside this London session, we don't have any 15-minute fair value gaps there. So, all right, you can annotate, right? No trade setup was presented for January 2nd London session, right? And because this is all information you're keeping on your strategy so that you'll know how often it's presented, how often it, you know what I'm saying, it worked, how often it failed, yada yada you. Okay. In reference to what your bias is, right? So based off of how price, right, is trading here, right? Remember we said it went down and took out the liquidity, right? Showing a desire to go back up to the premium something. We said whatever we was talking about during that time frame, right? Whatever. Let's go back to the daily and get our bearings together. Right. So, okay, right here. Right, we came down, then went up. Yeah, we said we came down, took out the liquidity, and was going back up to the premium. Right. So at this point right here, right, on the intraday time frame, right, we're bullish for this time frame right here. So for this time frame here, right, we're bullish. All right. And then for this time frame here, right, we're bearish. Okay. And then for this time frame here, right, we're bullish. Okay. Now, bullish, bearish, bullish, right, for these time frames here. Now we go down to the 15-minute, and there's a lot going on here. They the same colors. So let's go back up here and make these some different colors. So our bullish is going to be yellow, yellow, and our bearish is going to be no, that's too close to that. Too close to that. All right, it's gonna be blue. All right. Okay, so there's our January line. Let me make that thicker so I know what it is. Sorry, y'all. This how stuff go when you just be doing it on the fly, man. Shut up.
Hey, can you add the PM session to it?
You said add the PM session to it?
Uh-huh.
So now the PM.
Appreciate it.
Okay, now the PM session is. Oh my God, my eyes are going crazy. I don't know what y'all, but my eyes are going crazy. So, all right, I got to fix this. Okay, I got to make it like really stand out in my mind. Okay, so this is gonna. Chris, are you singing Gumbo? Are you singing Gumbo? What you singing? What is that? Oh. All right, now let's see how that work out. All right, so okay, so now those are deeper colors. Oh, that's why, cause it was a yellow color. It was a yellow color. Which ones was it? Whatever. We'll figure it out. All right, 15 minute. All right, starting over here. So we said yellow is the bullish. So we're bullish during this time frame. So coming in here and we got to change this because I can't see them. So yellow. All right, we had green. All right. Okay. Okay, here that work. There. And then. All right. Red there. Yellow. All right. Now, sorry about it, y'all. Now we got it making sense again. Now, so for this time frame right here, this day here, no trade setup was given. Okay. All right. So now, remember, inside this yellow background, we're bullish. So while we're inside of this, anything inside of this yellow area, we're bullish. Okay. And that yellow area extends all the way up to here. All right. So let's do this right here. Let's put a black border around these. All right, so we'll know where our ranges are. So we'll know where our ranges are, because there's a lot going on. Trust me, I wouldn't be having this much going on while I'm doing it, but I'm just trying to do a lot at the same time. All right, so now we got our bearings together. Get out of here, erroneous dot. Okay, so no trade setup presented there, right? We are bullish during this yellow time, so we're only looking for bullish setups at this because we're bullish during this time. All right, so for right now, we're only looking for bullish setups. But if you want to annotate and make notes of, right, because we see here during the New York AM, right there, right, we see during the New York AM, we got us a 15-minute, right, bearish fair value gap. And our criteria for both setups was a 15-minute fair value gap, right? Criteria for both setups was a 15-minute fair value gap. And on that 15, and for, let's do this right here. So I ain't got to be looking all over the world. We'll go to the end of this day right here. All right. The criteria for, so we got the New York morning with a bearish fair value gap. And then during lunch, we created a fair value gap. And then the afternoon, we created an inversion fair value gap here. All right. So 15-minute bearish inversion fair value gap. Okay. So we got the inversion fair value gap there. Fair value gap here, inversion fair value gap there. So now at this time here, since we've done all our other analysis, now we're bullish during this time, right? So for the afternoon, we were offered something that we actually would have taken, right? We actually would have taken that. And there's one that we wouldn't have taken, but if you want to document it, you can still document it. So no trade opportunity in the morning in London on January 2nd, right? A bearish opportunity in New York morning, but we didn't take it because we were bullish, and a bullish opportunity in the New York PM, right? Which would have yielded, well, we got to go to our confirmation times first, okay? So now we see we got a bearish opportunity. We're going to do the 5-minute first, right? We had a 5-minute confirmation and a 1 minute. So we don't know if it's an opportunity yet. So we'll annotate the New York AM session, what it did, right? Price traded up into a bearish 830 bearish, the 830 bearish order block, right? So at open, right, price traded down, set relative equal lows, right? Price traded down, setting relative equal lows, and then immediately traded back up. But during the opening range from 9:30 to 10, price traded down, set relative equal lows to the Asian low, and traded back up into the 830 bearish order block, right? After hitting the bearish order block at 10 a.m., price displaced away, creating a bearish fair value gap at the 10:15 candle, and then traded back up into it until 11:45, 11:50, up until 11:50 at the start of the lunch macro, and then displaced away, attacking the relative equal lows that was created during lunch, right? However you want to annotate that out. And then during lunch, from lunch until from 12:30 up until 2 p.m., right? The conclusion of the afternoon opening range, price consolidated on the 15-minute chart, then expanded up into consequent encroachment of the 12:30 bearish fair value gap, traded back down into the bullish order block from the consolidation, from that consolidation, then expanded up, right, and created an inversion fair value gap of that 12:30 SIBI. Right, traded back down, respecting consequent encroachment of that 15-minute SIBI, traded up, taking out the high of the 330 candle at, oh, that's after the close, right? Traded back up, closed the New York session without taking the high, but then took the high out between 4 and 4:15 p.m. All right, now go to our 5-minute time frame and then look at what was offered, right? So here we go. Price offered a short opportunity. Now, question. When y'all, that's why I asked about requirements. Okay, so now this is when that 15-minute was created, and this is when that inversion was created. Now on the 5-minute, right? On the 5-minute, are you looking for a 5-minute fair value gap that's created after it trades back into here? Now, are you looking for the 5-minute fair value gap after it trades back up? Yeah, I think we said that. Trade it back up and then create a 5-minute. Yeah. And then you said trade it back up and then create a 1-minute. Okay. So in this case right here, we have a trade that would have failed here because we traded back up into this, the bearish trade. The bearish trade would have failed, right? But we didn't take this trade because we were bullish. All right. Good thing we stuck to our guns. Why do we say that? Because when we created the fair value gap, we traded back up into it, came down, took out the sell side, and created a bearish fair value gap. So this is where, based off of our rules, right, this is where we would be. What did I just do? This is where we would be looking to enter, right? We'll be looking to enter here, right? Mandatory stop, safe stop, right? Boop, taken out, right? So this right here would have been a failed short, right? And we, you can annotate however you want to say it. You know what I'm saying? Your setup presented itself in the morning. It presented a bearish setup that we didn't take because we were bullish on the morning, and that bearish setup would have ended in a stop out, however you want to annotate that. All right. Then we come over here and we say, and then you can come here and say, we created a 5-minute fair value gap there, right? Because we created the inversion there, right? This is when it created. We traded back down into it, right? Created the 5-minute, right? And then we came back down to the 5-minute right here, right? Safe stop here, right? Mandatory stop is way down there, right? So you would have to decide if you had taken that trade, right? For me to be trying to take the trade, because you're looking at this high as low hanging fruit, right? And this is toward the end of the day. You look for that high as low hanging fruit. So I really wouldn't be going no farther than this low, right? But this is the mandatory stop. That's the safe stop, because this is the swing low where this resides, right? So you have to be realistic with yourself if this right here really presented a realistic opportunity for you, right? Because if you use the mandatory stop, or if you use the safe stop, if you always use the mandatory stop, you got stopped out. If you always use the safe stop, this is a very unbalanced trade that I wouldn't realistically be taking. So, you'll look at it like that. All right. So now let's go through quickly and look at a few examples where, all right, so we're look at some of the bearish examples and just to find somewhere we can see something that looked like it may have played out in our favor. Okay, so we got, all right, this is our New York AM, London Still ain't shaking nothing over there. New York AM ain't shaking nothing there. New York PM ain't shaking nothing there, right? Not for what we're looking for. Okay, not for what we're looking for. And here, London created a fair value gap there, right? This is when we're bearish though, so it created a bullish fair value gap. Nothing shaking there. All right, nothing shaking there. All right. Why do I feel like something's missing right here?
It might be a holiday, like the 9th or something.
Yeah, that is
Not
the ninth.
holiday, but
Yeah, that is the ninth. That's the ninth. That was when the market was closed.
yeah.
All right, that is the ninth. All right, so London. All right, nothing shaking there. All right. New York morning. All right, nothing shaking there. Wait a minute. Did we create a fair value gap there? Yes, we did create a fair value gap here. All right, so we created a fair value gap here. All right, let's give it a color we can see. All right, we created a fair value gap there, bearish fair value gap there, and then PM, nothing shaking in the PM there. All right, so go to our 5 minute. God dog it, forgot to do this right here. Forgot to cut this off. All right. All right, so now go to our 5 minute time frame now. Okay, 5 minute time frame. So, all right, we trade back, and we forgot to look at the 1 minute on that other example. Sorry about that. All right, 5 minute time frame. We trade back up into the I forgot to mark when it was created. So this is when the civvy was created. Okay, so 5 minute time frame, we trade back up to the civvy, come down, create a 5 minute fair value gap right there, but we never trade back to it. So on this day here, right, the 15 minute was presented, but after creating the 5 minute fair value gap, we never came back to it. So based off of our rules here, we don't have a trade for that day, right? But you still go through and annotate each one of these days. Every time frame you go down through, you're annotating what price did on each time frame, the same way we did back here, like on the monthly and the daily. Same way we went through and annotated what price did on each time frame, like we did here. You're going through annotated what price did on that time frame that day, but at the same time now this is when you're back testing your actual entry model, when you get down to your entry time frames like this right here, right? So you'll have a, you know what I'm saying, like a section on there for how a trade you actually took played out, and how a trade you didn't take played out on your entry model, right? And then the afternoon session, right? The afternoon session, it did not create anything on the 15 minute, right? It ain't create nothing on the 15 minute, and it did not react off of, and so it's reacting off of different PD arrays, right? So no setup for the afternoon on that day, right? No setup for the afternoon on that day. But are we is this making sense? Cause I know we done been on here for a long time. Is it making sense? Like what it is, you know what I'm saying? Anybody finding it helpful? Or is it making sense to actually, you know what I'm saying, see how I walk through it, or how I, you know what I'm saying, how I walk through it, how I do it, how I look at it, how I back test it? Is it like, you know,
Yeah, it is. Yep, it is. Man.
all right. And
Same on my side.
all right, so yeah, I know we done been on here for a while, but this is it. It ain't, you know what I'm saying, ain't nothing fancy or exciting about going through and looking at data. But I know for me, when I started out trying to back test and study this, I always felt like it was like some big hidden secret to what people did when they went through it, or I just didn't know where to start. So that's why I wanted to share. Like this is literally what I do, right? I come in and this is the kind of stuff I put on there, right? And I'm typing it as if I anticipated this to happen, right? In this case, we actually anticipated this stuff to happen, right? Because we've been doing this for a while, and we all remember anticipating these pullbacks, anticipating these rallies, talked about that, you know what I'm saying? Especially like we just went over yesterday, how we were looking at, we was watching, the price was in the middle of the road, right? And we was like, okay, we waiting for a signature to see if we are completing a sell model, or are we starting a buy model. We was looking for that. We were stuck in the middle of the road, and we looking for the signatures, right? And once we got the signature of which way we was going, which was anticipating it to go up, we were anticipating the power of 3 week to the upside, right? And since we was anticipating the power 3 week to the upside, then we was like, okay, is this day gonna be a power 3 day? I don't know, because the power 3 week need to come back down a little bit. May or may not be. You know what I'm saying? We talked about all this stuff and we saw it actually play out. But the only way we're able to do that was going back, doing this first, and doing it over and over and over and over, and getting familiar with, when you're looking at price, right? And get all this junk out the way, right? And get familiar, so that when you're looking at price, oh, that's the what's the name? How do I put it back on my default? I don't know how to put it back on my default, so I just drop these down, because that's like mad overbearing. Okay, so when you're looking at price, right, let's go to like a 60-minute. All right, so when we sit here and look at price now, we can come in and you look at the chart and be like, okay, price has consolidated here, right, come down, giving us a smart money reversal, gave us a low risk buy. Now we've come down, right? We traded above an intermediate term high, got a deeper retracement down into an imbalance, then we were displaced away, right? So now we're since price is showing bullish intentions, right now, you're looking for price, you're looking for reasons for the buy program to stay intact, right? So you go in and you look and see here on this hourly time frame, right? This is the latest leg that we're in, right? And you say, okay, if price wants to come back down to a discount, we have an hourly fair value gap right here that we've already traded off of, but it's still, right, some left open. So we have to allow, right? We have to allow for price to, if it wants to reprice into it, right? Because we came up, right, set the range, and then dropped back down into a discount, got an institutional order flow entry drill, traded up, but did not take out the high, right? So we have to allow for price, if it wants to get happy, to reprice if it wants to. But what's designed to stop that, right? We got internal buy side liquidity, sell side liquidity, right? Inside this range here, right? So now in the aspect of current price on this hourly, right? We have sell side there. We have buy side here. Right, we got sell side there, we got buy side there, and then we came up. We came down, set a low, came up, and made relative equal highs. Right, we made relative equal highs and pulled off. So now that we have these relative equal highs, right, this is internal. Right, we got internal liquidity of relative equal highs. All right. And then we have internal sell side. All right. And right now it's relative equal lows. All right. What in the world's going on? Why ain't this typing? Right there. So although we got this hourly busy, we had an institutional order flow entry drill. Off of that, right, we created relative equal highs, right? Prices showing bullish intention, right? Have not yet made it back above these relative equal highs, right? Trying to complete that market maker buy model here. So you don't really want to see deep retracements, but you want to allow for that to happen because you want to have your invalidation points, right? You want to have your invalidation points. And for this market maker model here, right, coming back down, your invalidation point would be there, trading all the way back down below that low, right? That right there is too deep of a retracement. That's giving you a bearish break in market structure, right? And then you're like, okay, so we're just going back like that, right? Looking at your invalidation point. So you got to allow for price if it wants to come all the way down, right, and knock out that sell side, right? What lets you know if it wants to come to that sell side? What's above there, right? We're on the 1 hour, right? So you'll go to a 1 day, right? You go to a 1 day chart, right? You really do it from top down, but I'm just doing it from down up right now. Come to a 1 day chart and you look and say, okay, the only imbalance is way down here past my invalidation point, right? Because remember, we was here and we said that coming down below this low, shrink it up, coming down below this low right here was our invalidation point, right? Right, and now when we go back to the day, that's that imbalance down there, right? That's that imbalance down there, and you don't want to see price. We said we don't want to see price coming all the way down there. So what other imbalance below price on the daily time frame you have, right? You got consequent encroachment of that wick right there. Not only do you have consequent encroachment of that wick, right? You got an inversion fair value gap right here, right? Got inversion fair value gap. In this case, you want to include the volume imbalance because that wick is extending beyond the consequent encroachment. Okay. You got the inversion fair value gap right there on the daily. Okay. So now you know what daily PD arrays rest down there that could possibly draw price to it on the 60-minute. Right? What does that line up with? That lines up with our, right, internal liquidity for this entire move right there at the hourly PD array that you say you have to allow for price to come back to it if it wants to. You don't want to see it if it's exceedingly bullish, but you have to allow for it. Why? Because you have a daily PD array there, inversion fair value gap, a daily consequent encroachment of a premium wick, and then you still got an imbalance that was left unfilled on the hourly. Okay, but the bullish thing you would want to see is price, if it wants to, just taking out this internal liquidity there, right? Because on this hourly time frame, there are no imbalances to trade to. So just come sweep this liquidity and then go attack the buy side, right? That would be the best case scenario for bullishness, right? And what is being supported by that also, right? We have a bullish breaker here, right there. You have a bullish breaker there, right? High, low, higher, high. Bullish breaker right there. That's right in line with sweeping that liquidity, right? Trading into maybe that order block, right? Because I put a line on the open of that order block and come back over, right? It's right there, just dipping down into that bullish order block, right? I mean, a bullish breaker. I'm sorry. Dipping back down into that bullish breaker. And then we also see now that we are, is there a gap there? Yeah, there is. Okay, we see here that we came there and we closed above consequent encroachment of the SIBI, pushed up, set relative equal highs, right? So showing a little weakness on the SIBI here, right? Closed above consequent. This is an hourly SIBI. This is an hourly closure. Showed some weakness of this SIBI, traded up, set relative equal highs, pulled back down, closed respecting the body. See, there's a super long wick, so I'm ignoring that, right? Closed respecting. Looked like the mean threshold of that body there. It did. Closed right there. Respect the mean threshold of that body. See, there's a super. One day somebody was asking me, when do I respect the wicks, right? There's no rhyme or reason, but see how big this wick is and compared to that wick there. At this case, I just ignore that wick and just look at the body, right? Because that wick was some type of stop hunt on a lower time frame. All right. And so this is all the confluence of the bullish intention where you want to open, trade down, take out some liquidity, and then displace up, right? And like a power of three scenario, right? Accumulation, manipulation, and then distribution above the high, right? And you'll be looking for some type of move like that, right? To give you opportunity to participate. Right, that'll be best case scenario for what's going on right now with what price has got going on. Right, again, you have to allow for price to come to the higher time frame if it wants to act foolish. It's showing you it's exceedingly bullish. Right, why I say that? Because we cut through this area like butter, slice through it. Okay, and right now it's resting on the top of it. We got institutional order flow entry drill and we left, right? So if price is done with this area, you don't want to see it digging back down into this area, right? Just want to see it hit that liquidity because you want to get liquidity. You want to get rocket fuel for the move. Hit that liquidity and get on up out of there, right? And then you have your invalidation points for if it continues to slide. Makes sense?
That makes sense.
Anybody got anything for me? I apologize for keeping y'all this long, man. We've been on here a long time. How long we been on here? Somebody give me a time check. How long we been on here? I can't even see. Where's my stream? Why can't I see my time on there?
I think it's
Oh,
an
there
hour
it
and a
is.
half
Hour and
or an hour
45 minutes.
45. Yeah.
It was closed up. That's why I couldn't see my time. It was closed. All right. Y'all got anything for me? Anybody got anything for me? Any questions, concerns, comments? Empire Trading said it's difficult to understand. Got to go look at them videos, Empire Trades. Go look at them videos.
This won't be saved, huh?
Yeah, it's on YouTube. It's streaming on YouTube
Oh,
right
is it?
now. Yeah, it's streaming
Oh,
on
okay.
YouTube right now.
Oh, for sure.
Yeah, I when I started, I was like, I don't know what I'm going to say, so I'm going to go ahead and record it. I said, oh, you came in later. You came in later. You weren't on there at the beginning. Yeah. That was J-Rock, wasn't it?
Yeah, that was me.
Yeah. You came on later after I had already
Yeah.
talked about that.
Oh, okay. Perfect.
Here Learner said, Michelle said, I'm not keeping y'all. Michelle put 2 hours, like, hurry up. Michelle put 2 hours, hurry up. All right, man. Ain't nobody said that, so I guess that's it. Hopefully, y'all was able to glean something from this. Like I said, I went back through it to show you like what I did when I first started. Right, I had my actual entry requirements of my entry. Right, this was just what we picked out from a couple members, and then once I had my entry requirements, as I was going back through to see what price was doing from the monthly to the weekly to the daily to the 4 hour to the 60-minute, 15-minute, 5-minute, 1 minute, I was annotating what price did on every time frame, the same way you see that I did over here. Like, God dog it, come here. The same way I did here. This was the weekly. Yes, this was the weekly example. Same thing I did over here. Every time frame, this is what I did. I annotated what price reacted off of, as far as like my trading style of what I look for, and then I annotated what price did during that time, trying to make notes of how much time it took to do this, how much time it took to do that. However, to let you know, give you like a concept of time, right? And then I would go all the way down, and once I got down to where I enter, right, then I would start specifically looking for where did my trade setup show its hand, and if I would have taken a trade, would it have or if I wouldn't have taken a trade, would it have been a loss or a win, right? Annotate all of that once I get down to them lower time frames, and that would be, what I'm saying, that can be as simple as, once you don't have to make a separate entry, but like, let's just say this was a daily time frame. I mean, this was a 5-minute time frame that I'm annotating here. You could just go into detail about how the trade played out inside this right here, or you can put over here what the overall price did, and then on this same screenshot put another box over here with what the trade did over here. You know what I'm saying? If you want to separate the two, you don't have to make a whole separate screenshot unless you want to, however you want to do it. But by going back through and doing this, right, it gives you reps and looking at charts and seeing, what I'm saying, what is it playing out to do? What is it, what I'm saying, what is it trying to do? Where is it heading to? Where's Picasso house? What's the draw on liquidity, right? And as you get better at realizing the draw on liquidity, that will help you in like trading on the right side of the market, meaning you're only trading when the market is bullish, and you're only trading when the market is bearish, because that's going to give you the best moves, right? You can trade against the grain, but the moves are going to be difficult and short-lived. Whereas when you're trading with the grain, the moves, if you get in at the right time and the right price, time is king, then the moves they're usually smoother, less headache, less worry, and they usually move, right? Instead of like you trying to go, if you're trying to go long when it's bearish, right? If you're trying to go long when like imagine when price coming down here, imagine trying to go long up in here, right? Imagine trying to go long up in there. You are dying. Every time it look like it's gonna pop out, it come back down on you, and then all of a sudden you get this whoosh, that whooshing move right there, come back up, whoosh. See what I'm saying? It's like the moves are like smoother and longer when you get in at the right time and pricing you on the right side of the market.
Yeah, I
Right?
think I was murdered that day.
You talk about over here?
Yeah. Yeah, I died so many times.
Yeah, so it's like, you know, but going back and the one thing that really helped things click with me is when I was able to really internalize market maker models. That's what really helped me take my analysis and trading to the next level, because like just like everything is kind of hinged on the power of three, right? Because it's all about accumulation, manipulation, and distribution, right? Because you want the algorithm to accumulate orders. You want the algorithm to manipulate the market and then go distribute the orders that they got in above or below highs, right? Everything hinges off of this. But when you really think about it, right, this is really what the market maker model does. You see what I'm saying? Because the market maker model is all about accumulation, manipulation, and distribution. Because you accumulate, right, these orders up here, right? You accumulate these orders up here. You manipulate the market down here and take these people out. And then you come back up here and distribute above these highs. That's all the market maker model is, right? The algorithm is bullish, right? So it creates, right, buy stops up here, right? Lets the orders accumulate up here, and then it manipulates the market down. Why is it manipulating it down when it's really bullish? Because you got your accumulation, your manipulation, and then when it manipulates down here, it gets long. Because the algorithm, it wants to be long, right? But it don't want to buy up here treetop tall. It wants to buy at a discount. So it accumulates orders. It accumulates enough liquidity up there until its interest is peaked. And then it manipulates the market in the opposite way, right? Finds somebody to take advantage of down here, pause, right? And then it comes back up to that liquidity that it engineered. Is that not the power of three? Accumulation, manipulation, and then distribution, right? And once I internalize these market maker models, right, and then I can point out we're on the right side of the model. So I should only be looking for reasons to buy. I shouldn't be trying to sell. No matter how tempting the sell is, no matter how much money people say they're making going short, I need to only be looking for reasons to buy because I'm on the right side of a market maker buy model. I should only be looking for reasons to sell because I'm on the right side of a market maker sell model. Hey, man, I hope that helped y'all, man. If y'all don't realize that y'all getting boot camp level stuff, this is a actual public video out here on Al Gore's internet right now. Gang, y'all already know. Y'all know what the lick read. Y'all know how we do every day. Every time I pop up, what Deborah say, Tim, every time you open your mouth, gems fall out. I think that was Deborah who said that. Somebody said that. Deborah.
It was me.
But I hope this helped y'all, man. I promise y'all, I always told y'all, this ain't never been a money grab for me. You know what I'm saying? Yeah, I was charging a little bit more money than I typically charge for the boot camp, right? But that's just like my little brother say, man, you see how many people be showing up when they done paid their hard-earned money for this? I say, boy, you ain't never lied. You ain't never lied. It's I think it's not counting my brother, it's 18 other people in the boot camp every single day. It be like 16 or better on every, I'm talking about 9 o'clock in the morning when people say I'm working and I can't be there. It be 16 or better every day. But when we be in there with the regular gang or with the, with the free stuff, man, it's like 70 some people in the gang and every day we might get 8. But it's just about the time. You know what I'm saying? It's about the time. I'm putting more time into it. I'm putting more effort, you know what I'm saying? Like really, really trying to make, because it's every single day. It ain't just like pop-ups. It's every, like in the beginning, we was doing 2 a days. We was going at 8 o'clock at night with a lecture, 9 o'clock in the morning tape reading. 2 a days, every single day. You know what I'm saying? So it's like, hey, so I had to put a little bit of a price tag on it, but I'm just out here to help y'all, man. I ain't the smartest guy in the world. I'm just some dude from Fort Lauderdale, Florida that learned something that changed my life. And I popped up on Jason live stream today and he asked me, he said, Tim, share with the people, if you will, what was one of the biggest hurdles you had to over? What was one of the biggest challenges for you when you started? Because people want to be where you are, right? You don't work, right? You trade, you retired from your job, you trade. So people want to be, what was one of the biggest challenges you faced? And the first thing that popped in my mind, I said to him, I said, the main problem that I had was finding honest people with valuable information. And since that was my main thing that I needed, I lacked from day one, I've always tried to be that honest guy that give you valuable information. And I appreciate y'all for taking y'all time to come listen to me, man, because I feel like my calling in life is to help people. No matter what avenue I've ever been in when it comes to making money, I've always tried to share my knowledge of that thing with other people. Right? Graphic design, videography, photography, music, when I was producing music, trading, anything I've ever done for money, I've always tried to share with others how to do it too. Why? Because trying to find honest people sharing valuable information. And I hope y'all get value out of what I share with y'all day in and day out.
Nah, you have been, and I appreciate it. I know exactly what you mean.
I appreciate that. Michelle said, I remember when you was teaching financial literacy for the community, or both. Yeah, it was both. Yeah, I was going to the high schools. I went to some high schools doing it. I was doing it at a community center for youth. I did it at the library for a bunch of people in my congregation and some other people in the community. You know what I'm saying? It was for all that. I went with that one. I was going into like real financial literacy. We was talking about, like, I was teaching kids how to write checks. I was teaching kids the difference between a savings account, a brokerage account, a 401k, I was teaching them about all kind of different things. we ain't gonna do that. We ain't gonna do that, Michelle. Well, Michelle crazy. Michelle crazy. Hey, man. And on that note, if y'all got somebody to share this with somebody who y'all think may benefit from this, because we, like I used to tell y'all all the time, we trying to build a new Wakanda together, man. I don't want to be there by myself. I want my family to be with me. You hear me? Tomorrow is the third Sunday. So that's the Black Spiders, the boot camp, and the mentees at 7 p.m. Q&A. Pull up with your hard-hitting questions. Tomorrow night, I already know I ain't going to feel like sticking around long. So if y'all don't pull up with no questions quick, I'm going to be out of there. Hear me? To everybody on Al Gore's internet, man, I appreciate y'all for hanging out with me. Y'all cannot see my face. All y'all talk of the tick people, if you on the talk of the tick, hey, the incoming president said y'all got 90 days to get this merger in order. He giving you 90 extra days, so it's not going dark tomorrow. somebody said they want to merge with TikTok. So he said you got 90 extra days. TikTok, you're still breathing. Everybody else, until the next time I decide to get on Algo's internet and share my thoughts on this thing that we call price action. Y'all be safe out here these trading streets, man.